3.5 billion that you spend this year, how much did you spend last year on CapEx?
About $3 billion. Okay. So we've increased that. And about 2/3 of that is focused on our stores. Remodeling our stores, we'll remodel about 300 stores this year. Mm-hmm. We'll continue that pace for the next couple of years. We'll open up about 30 new small formats in New York. We just opened up in the East Village, the Lower East Side, a great new college campus store at Florida State and one on Ohio State's campus. So we're getting into new neighborhoods where we haven't been before. And we'll continue to invest in technology, supply chain, and fulfillment. That ease side to make it really convenient to shop with us no matter how you want to shop that day.
Let's talk about some of the macro effects that are out there. First of all, very strong consumer. You are benefiting with traffic growth up by 6.4%. Comp sales, when you include digital, up 6.5%. The comp store sales up 4.9%. So how much of that, obviously you've made a lot of changes, but how much of that just speaks to the health of the consumer today? It's
a very healthy consumer environment. I've been doing this for a long time. I think this is the healthiest environment I've ever seen. But importantly for us, we're building market share in virtually every category.
Who are you stealing from?
Well, I think we're picking up more footsteps when we see traffic up 6.4% and stores growing at almost 5%. Becky, it was almost yesterday. People were saying, stores are dead.
Right.
No one's going to invest in stores. I remember back in February of 2017 when we announced we were going to spend $7 billion of capital over 3 years and take $1 billion of operating income and invest in our team, our brands, in providing more value. People looked at us and said, why are you investing in stores?
The street didn't like that at first.
They didn't.
Yeah.
I actually remember it was February 28th of 2017.
We were just talking about that with the analysts, too.
When we pushed the announcement across the wire, and I watched you and Joe on set, and you looked at it and said, $7 billion of capital in stores? $1 billion in wages and training and development in the brands? There must be a typo here.
I don't remember
was the reaction.
What was our reaction? Did we trash it at the time, or did we think it was a good idea?
The big question was, why is Target investing in stores?
Yeah.
And after that release, I had to walk across the street and talk to our investors and explain to them that we were investing in the long term, in the health of our business. And not just for the next 3 years, but to make sure this iconic brand, Target, is here 30 years from now. And now we're starting to see the results of that long-term vision, committing to the importance of stores, fulfillment, our brands, but most importantly, investing in our team.
So does this buy you room with investors or credibility with investors to say, now we're going to spend even more and you should be okay with that? Do you think that buys you the street cred to do it?
Well, we're very focused on making sure we get the right return on that invested capital. And as you saw in the release, we're seeing returns of over 14%. Right. So those projects we're investing in are providing the right return for our shareholder. And I think, as you saw with our EPS this quarter, it grew almost 20%. So we're seeing a great consumer response, unprecedented traffic. As we go back and look, we've never seen traffic growth like this.
Right.
But stores are driving growth again, digital up 41%, the brands are connecting with our guests. So all of those investments are starting to work hand in hand.